Hello, in this short video we're going to talk a little bit about the latest 2016 USDA home loan requirements and guidelines. This is brought to you by USDA Mortgage Hub.com. We service all 50 states for USDA Rural Housing loans. First, we're going to discuss exactly what is a USDA Rural Housing mortgage. The United States Department of Agriculture, or USDA, offers this government-backed home loan that provides a number of homeownership opportunities with no down payment needed. The goal is to help expand America's rural communities by offering favorable mortgage terms with low down payments. The 502 guaranteed loan is for the moderate income, and it's only offered through USDA approved lenders and banks. Qualifying income of up to 115% of the area's median household income. Most applicants will fall in that category for the 502 guaranteed program. Low income or subsidized housing will generally fall into the USDA direct program, and that program is offered exclusively directly through the U.S. Department of Agriculture. This government-backed program is one of the few remaining mortgages that still allow home buyers to purchase a home with zero money down. In fact, the only other program available is the VA loan, which is designated exclusively for military home buyers. We're going to talk a little bit about who exactly is eligible for a USDA loan. Any prospective home buyer is eligible. The program is just not limited to first-time home buyers exclusively. Applicants generally have to have a minimum qualifying credit score of 620. Keep in mind a 620 credit score does not guarantee loan acceptance or approval, as all lenders and banks do have in-house what they call overlays, additional requirements for any home buyer that has had any serious past financial hardship like a bankruptcy or foreclosure or short sale. There could be additional waiting periods for those applicants even if the credit score is over the minimum requirement. Applicants must have documentable income, W-2 or tax returns for 1099 self-employed buyers. Buyers must have household income under the set USDA eligibility limit for your county, and the properties must be located in a USDA approved areas. Those are the two main eligibility factors. We're going to talk a little bit about that in the next slide. The primary USDA requirements again are where the home is physically located and the income for the entire household. First, the home must be located in a USDA approved location. The home seller, whether it is a private seller, a bank foreclosure, any seller is irrelevant. It's where the home is physically located, as it must be in a designated USDA approved location. Buyers must have household income that is set below the county limit for their county. The income limits, it's important to remember that these do apply to all members in the household, even if they're not on the loan application. An example would be if maybe an elderly parent lives in the home, they receive Social Security income each month, their income would be included for the household eligibility limits when it's all factored in and calculated. Applicants can basically just go to any search engine and search for USDA income and property eligibility. Once you're there, it'll take you to the USDA's main site where you can search an address and determine if the property is eligible or ineligible. In addition to that, the map will give you more of a fuller view of the entire area so you can visually see which locations around your city would be eligible. But the map is very helpful, and a lot of buyers are actually surprised on what is still considered rural eligible. So it's a good idea to plug in an address and just take a look at there and just play around a little bit with the map. In addition to that, there's a section that also has the income calculator. And in there, buyers can put in their income. It'll ask a few questions as far as the number of members living in the household, the amount of dependents in the household, and from there it'll figure out if your income is below the set limit for the 502 guaranteed program. Most of the country, the limit for a standard household of 1 to 4 members is around $75,000. And again, there are additional deductions that can be given for dependents, elderly members in the household, documentable child care expenses, among other things. So the calculator is very helpful. If you have any questions about that, again, please contact us at USDAMortgageHub.com or call 1-800-691-8826. What type of homes are eligible? Again, any single-family residence in a USDA eligible area, no matter who's selling the property, the home needs to be in decent move-in condition. Houses that basically meet all the HUD standards in regards to condition. Most government mortgage programs like USDA, FHA, and VA pretty much follow the same requirements as far as condition. The home does not need to be perfect, but there are certain requirements that need to be met in regards to functionality and safety, among other things. Generally, a tear down or an extensive rehabilitation type project, those typically would not be eligible for the program. Only primary residences apply. You cannot use the USDA loan to purchase an investment home, second home, or vacation home. No mobile homes or manufactured homes unless they're brand new. In this case, the financing must be arranged through the approved dealer that's selling the mobile manufactured home. Again, single-family homes, townhomes are also okay, and condos that generally meet FHA's approved condominiums, those are generally okay too. Again, as long as they're located in a USDA approved area. In this slide, we'll talk a little bit about the benefits of the USDA home loan. First and foremost, the program is 100% financing and does not require a down payment. In addition to that, the home buyer's closing costs and prepaid escrow requirements for taxes and homeowners insurance, those can all be rolled into the loan amount with the supporting higher appraised value. Closing costs can also be paid by the home seller. They allow the home seller to pay up to 6% of the buyer's closing cost and prepaid escrows, which is generally more than sufficient to cover it all. Home buyers can often move into a home with very little money out of pocket. It's a good idea to probably allocate $450 for an appraisal, and if you opt to get a home inspection, which is generally a good idea, those can run about $300 or so, give or take, depending on your area and what is required. A lot of times buyers can also, with the loan properly structured and a contract properly structured, they can receive back in certain cases their appraisal cost and home inspection costs. The program is not, borrowers for the program are not required to be first-time buyers. Move-up buyers can definitely use the USDA loan to purchase a home. In addition, buyers are not required to do 100% financing. They can put down 3% or 5% or 10% down payment if they choose to. A lot of buyers find that it's a good idea maybe to do a USDA loan even if they were already approved for FHA because of the mortgage insurance. Lower mortgage insurance, or most people know that term as PMI, private mortgage insurance. It's nearly 40% less with a USDA loan. So if you are already pre-approved for an FHA loan, maybe a good idea just to check to see if your income falls below the limits, and if your address, the property you're interested in, if it's in a USDA eligible area, maybe a good idea to take a look at the USDA loan, just for the monthly mortgage insurance savings loan. No assets or savings requirement is required for the USDA loan. Applicants are not required to have a certain amount of money saved up to apply for the USDA loan. Homebuyers that need assistance are encouraged to reach out to us by visiting USDAMortgageHub.com or calling 1-800-691-8826. Again, we service all 50 states across the nation 7 days a week. Thank you for listening to this presentation today. We hope to hear from you soon.